Hey everybody, Boris BK Force. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for July 16th to July 20th, 2018. And the story in the COM dollar land is essentially the same. The basic ranges have been preserved. We're still 73.75 in the Aussie, still 130, 134 in CAD, and 67, 69 in Kiwi. The basic difference, I think, is that sort of the supports were certainly tested in the Aussie and the Kiwi, and we bounced back a little bit off of those. And with CAD going its own way. What's interesting to me about CAD is I think it's actually probably fundamentally the strongest of all the COM dollars. But the reaction after the BOC rate hike was surprisingly dovish. Perhaps because the market maybe is thinking that this is going to be a one and done type of a situation, but it really feels like the Bank of Canada is going to follow the Fed on a rate by rate hike increase. And at this point, it's the only other G7 central bank that's tightening. So in some ways, I think the Canadian dollar probably deserves a little more respect than it's gotten so far on a fundamental basis. And the price action is kind of indeterminate. We'll take a look at the price action in a second, but let's take a look at the calendar. And the COM dollar land is very quiet this week. We have basically PMI services from New Zealand. We have RBA minutes coming up on Monday. We do have two serious events on the COM dollar front. One is the Australian employment data, which we're actually very bullish, with Kathy feeling, well, not very bullish, but mildly bullish, with Kathy feeling that services and manufacturing production increase. That should be a good guide to perhaps a strong employment data. The employment data in Australia has sort of been followed the same funk that employment data in the U.S. has followed, which is lots of employment, little wage growth, and therefore little retail spending, real serious growth, keeping the RBA in a decidedly neutral stance. We'll see if this changes this week, but certainly should be at very minimum mildly positive for Aussie if it comes through as expected. And then the end of the week, we actually have a lot of data for CAD, which could be important. We have the CPI data, we have the retail sales data here. Here we are also mildly bullish, and think the CAD should trade lower as a result of this. I think there's potential here for CAD to make more headway towards the 131, possibly the 130 level as we go forward. Let's take a look at the charts here and see how the COM dollar is set up. So let's look at the Aussie. Aussie had a nice. This is the daily charts. So we can clearly see Aussie building a very strong base right in front of the 73s. Still very much, in a downtrend below the long-term moving average, but a nice big bounce. It's actually sort of if you want to trade the anti-dollar rebound trade, this is a very low volatility way of doing it. Can Aussie extend, towards the 75s? Possibly. You can see that the 75 has been a big resist point, and that's what we came off of. But we're correcting and mildly moving back up. Kiwi, not so much. Kiwi is really having a hard time getting off the ground, because I think at this point, the expectation is that the RBNZ is going to stay stationary all the way through till next year at best. And the trade spat that we're having across the world is certainly having a big impact on both Aussie and Kiwi, but Kiwi particularly because the fear here is if the U.S. really clamps down on Chinese exports, that could dampen Chinese demand for imports. We already saw imports really come in. This is interesting. Last night we had the trade balance numbers came in. They were record high, but as a result of the fact that imports were significantly lower than before. So if Chinese are curbing demand, that just has the absolutely most devastating impact on New Zealand, which does a lot of soft, good commodities with China. And that's maybe the reason why the Kiwi is just not performing as well on all those fears. And CAD, of course, becomes a much more its own story. And to me, this is an interesting story. So 32s got rejected effectively twice. So we had this BOC, ran up to 32s, reversed that, moved down to 31.50. This level, this looks to me like a very, I like this short. I like this short just on an anti-dollar flow with a very, very limited amount of risk here, because you're talking about 32, let's say 32.50 as your maximum risk here. If it breaks out, then we're clearly wrong on the pro CAD trade. But the downside here has at minimum the support around 30.50, and of course, ultimately, a true strong pro CAD move could take us all the way down to 130. Oil coming off the highs, not helping Caddy. But even the announcements that the U.S. is going to release some of the Strategic Petroleum Reserve, not really taking oil down too much. The fact that we're kind of consolidating around the 70 level, not really correcting very badly, is bullish for CAD, along with potential data into the end of the week. So I like this punt. If you're trading the anti-dollar trade through the commodity dollars, this probably is one of the more interesting trades here. The fact that we closed at the lows of the day, also bullish, bullish CAD and obviously bearish dollar CAD as a potential move, certainly to 30.50 and ultimately maybe all the way to the test of the 130s. So that's how the COM dollars shape up. It's a sort of a typical mild anti-dollar reaction, but they are signaling that a turn may be due. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.